You guys all are doing really interesting research, digging down to levels that most of us never see. And I wanted to just go through and hear from each of you sort of what the most recent kind of discovery you've made in this space in your own research is that, might surprise people, that surprised you, whether it's the data you found or patterns. Tell me what you've been working on that's been interesting.
Sure. So one thing that I found that's actually very high level and can be replicated by anybody at home who wants to download some things from Blockchain.info is to understand how the price movements actually relate to fundamentals that it's possible to reason about. So, you have sort of the wackier commentators saying things like, well, the price could be anything. There's no underlying value, so how do I know if $1,000 is a good price or $500 is a good price? There's a sort of economist out there who says things like, well, what kind of asset goes from, $50 to $1,000? There must be something wrong. It must be a Ponzi scheme of some sort. And so you can sort of refute that with just a little bit of plotting of charts. So, it can be hard to reason directly about the Bitcoin price, but you can reason about other fundamentals like transaction volume and velocity. Mm-hmm. And so so velocity is sort of how frequently things should be used. Now, there's no, how do I know what the velocity of Bitcoin should be? I don't. And in fact, I think the velocity will change as different segments of the market change. So as you get more regular transactions, as you get different wallet apps, as you get different changes from speculation and so on. So it's not a fundamental constant, but it's something you can reason about and possibly predict and model. And then the transaction volume, of course, the transaction volume is impacted by newspaper articles and by, price movements and so on. So it's all sort of, wrapped up. But at a fundamental level, if you have a certain transaction volume that's occurring on your system, okay, so if you want to support, say, $100 billion worth of transaction volume, we've been going up like this, about, 40 billion roughly would be an annualized amount now. So it's not crazy that it could go up to 100 billion fairly soon. If you're going to support that level of transaction volume, and if each Bitcoin can be used, say, like 5 times a year, roughly on average, then that's going to tell you what the exchange rate of dollars to Bitcoins has to be. And so if you look out, the thing that surprised me, so this is a rough theory, but none of the underlying relationships should necessarily be stable. But if you go out and look at the data, you can actually more or less see that the Bitcoin prices have roughly tracked transaction volume in the proportions you would expect with a roughly constant velocity. And it's kind of surprising because the market is so nascent and there's so many things left out of that sort of simple analysis. And so what I take from that is just that this market is not sort of crazy, it's not completely divorced from fundamentals, and that the price movements have tracked in the use of the system in a broad sense.
It's an efficient market.
It's not. The price fluctuations aren't just coming out of nowhere.
It's a rational market.
Yeah.
It looks like it's you can understand the rough outlines of the market through fundamentals.
Yeah, I haven't seen exactly that. I think if you look at the number of transactions on the blockchain, it has absolutely no relation to the price, which is something that I think is like telling in a market that doesn't behave like a currency like we would like to see it. I agree that the velocity of money, if you could measure inter-user trades, would be a perfect model of the fair Bitcoin price. But at the moment, the number of transactions is invariant to the price, and the transaction volumes don't have an impact when the volume changes, and the exchange trades also don't map onto the transactions on the blockchain. So I'm finding it difficult to see all the solid relationships at the moment.
So I would agree that as you dig deeper, it gets more complex. But if you download the data from Blockchain.info and draw a few pictures and do a few divisions, you can get a nice, pretty picture. So I can show that to you.
Yeah.
Are there any pieces of relationships you have seen that have been interesting in the data you're looking at?
Yeah, I was actually going to say that, contrary to that, the fact that the number of transactions doesn't relate at all to the number of users coming onto the system or anything like that is something that I found quite surprising. The other thing that I thought was pretty surprising is that there's a bunch of transaction fees that are just sitting in the memory pool that aren't being picked up by miners. So the mining market is not picking up all those transaction fees. That's a little bit of sort of irrational mining behavior that still needs to be worked on.
Andreas?
Well, I would say that's not irrational behavior. The ability to which the speed at which you can propagate a block depends on its size, and therefore, given that the reward is disproportionately biased towards reward instead of transaction fees at the moment, getting out a smaller block at high speeds in order to collect the reward. Because keep in mind, you don't probabilistically decrease your reward collection. You either get it or you don't, and it's a race. So. I think that's a rational response, leaving transactions out in order to make a smaller block.
But that's a really bad thing for the network.
It's a bad thing for the network now, but over time I think it balances out, and we're going to see that gradually change, but we'll see. To me, the most interesting thing is the change in relationship between the authority of issuance of a currency and its monetary value. So up to 2008, sovereignty created currency. The fact that a scarce sovereign entity could create a currency is what gave it value. And now I foresee a world where we're going to have hundreds of thousands of currencies. Because currency at its very basic level is a language, it's a form of expression, a language that is used to communicate the transfer of value between individuals. If you look at a primary school and you look at, little hominids in their native environment, what they do is they invent currency. It spontaneously emerges from the social interaction. They trade bubblegum, they trade rubber bands, they trade Pokemon, they trade Tamagotchi. Trading as an exchange of value is an emergent property of social behavior. So when anyone can create a currency, when Joey can launch Joey Coin in his school with 2 clicks of a web interface in order to compete against Maria Coin in a popularity contest, we will have millions of currencies. Asking how many currencies we will have is equivalent to asking how many bloggers will there be on the internet. And the answer is all of us. Once you understand currency as a conversation, the next question is what gives it monetary value? And when sovereignty isn't the source of authority, use is the source of monetary value. So user adoption is what gives a currency value. And that creates a very interesting situation because you could imagine 10 years from now in a small tribal region in a remote place of the world, and people are using Dogecoin as their primary currency. And they have no idea what a Shiba Inu is. And they have no idea what this dog is doing on their currency. But guess what? They had no idea what the old white lady that said Queen Elizabeth was on their currency either in colonial times, and they used it anyway. And it has monetary value for them. We're going to be surprised by what creates monetary value. And so my last prediction is this. Up to 2008, sovereignty created currency. We now live in a world where currency creates sovereignty. And Bitcoin is the currency that will give internet sovereignty in the form of financial and purchasing power. And that is a very powerful idea.
We have 30 seconds. You guys have all allowed you all to sound very smart. Now I'm going to ask you the stupid question that you don't get to give any explanation for, but price of Bitcoin in a year, the price of Bitcoin in 5 years. We were supposed to ask this question, so I'm going to make it the last one that you can leave all these wonderful people with.
We should start on that end then.
Yeah, Andreas.
I don't really know.
I know you don't. We can't get a number for at any point in the future where you would imagine this.
Well, I think the price of Bitcoin will stabilize in the several thousands of dollars at some point in the near future. Certainly way above it's going to be here.
Yeah, in the couple thousand in a year or so.
I'm going to go 500 in a year.
Okay, that's all. We're done.
Foundation is a non-profit charitable giving organization leveraging the power of the Bitcoin community to improve public health and the environment worldwide. Help us demonstrate the significant impact of Bitcoin in addressing these critical issues on a global scale. support international giving in Bitcoin, please visit our website at www.bitgivefoundation.org. That's www.bitgivefoundation.org.